Hi everyone, welcome to this live show. Before starting, I would like to apologize in advance because I have a school across the street, and there are a lot of construction workers improving that school and working on the school, and there's a background noise, which is pretty intense. Sorry for that. I have closed all the windows, but that's the most I can do. And anyway, here we are, and we are going to talk a bit about market, currencies, and macro news that can affect the market. I do believe I will start all the way around today because I would like to share with you my charts because I do believe that unbelievable oil prices are still among the market leaders these days, as it has been ever since the year started. We have seen the commodity recovering some ground Friday, Monday. It was sort of a speculation that an agree will be made, right, to freeze or cut production. The fact is that today, when the commodity, this is U.S. Futures crude, okay, West Texas Intermediate, but it applies to both prices of oil, given that they are both reacting the same way. Anyway, what I was trying to say is that earlier today, during the European morning, we have some news saying that Russia, Saudi Arabia, and Venezuela and Qatar had agreed to freeze production at January levels. Okay, they did not agree in a cut, but they agreed to freeze production. Honestly, the measure seems way too poor for the continued worldwide glut we are seeing in oil. And therefore, that's why the commodity plunged over nearly $2, right? And I believe that's one of the reasons why the market is still reacting negatively after a couple of days of positive sentiment, right? So keep an eye on oil because it will likely affect the market. Of course, it will weigh first and more in Australian and Canadian dollars against the greenback. They are both under some pressure so far, not seem really relevant, but they are also affecting stocks. I use the DAX as an European reference just to have a clue of what's going on among European indexes and take a look at what happened yesterday. We have an opening gap on Monday and a sharp advance, yet now we are down on oil's line, right? The stocks, honestly, I have been watching and following daily charts in stocks not because I trade them, but because I want to know how the market feels, right? Sentimentally, it's the way, and I want to know what's going on among investors. And the fact is that that 2-day rally with C on relief has been barely corrective. If you take a look, I don't know, the Dow Jones, the longer term outlook, yeah, we're pretty bearish in here. We could discuss if this is a double floor or not, but the fact is that the neckline is not around here, and we need to see some steady gains above that level to talk about a firmer recovery in its stocks. And with today oil prices down, stocks had little room to rally, right? Anyway, this affects the plug in oil, right? Affects currencies in different ways, right? The Aussie and the CAD, as I said, came under pressure, but the euro and the Japanese yen got benefit from crude oil declines because the yen is a safe haven as well as gold. Sorry, but the euro is taken as a funding currency lately due to the central bank turning rates negative. So you can borrow money in euros; it's cheap, right? Ultra cheap to invest somewhere else. So they turn usually higher when oil plummets. And pound suffers because it's correlated with the Canadian dollar. They also produce oil, and not to mention that the pound is generally weak, and that today we have another round of negative inflation data in the United Kingdom. So for the most, keep in mind that the pound will remain under pressure and the euro may probably bounce. Anyway, I want to share with after that. I want to jump to the macro calendar if you give me a second so we can take a look at what we could wait for this week. Here we are. Okay, guess you're seeing it. As I was saying, inflation was pretty poor in the UK. Monthly basis down by 0.8%, sorry. And the year-on-year advance has been 0.3, which is nothing, right? We need a 2 at front in here to talk about a stronger or steeper recovery in inflation and therefore in the economy. Producer price index output and input was also quite negative. Yeah, indeed, this was better than expected, but still way down. So, generally speaking, that means that there will be no rate hike in the UK. Remember last year when Karen said uh, a rate hike will be sooner than expected, and all of a sudden this year the speech is now it's no time to raise rates, right? So this is telling us that no rate hike is expected in the UK, and therefore the pound will continue suffering. We are still in doubt of whatever the Fed may do, right? They promised in last December, or they tiptoed probable 4 rate hikes this year. We are waiting for them, but the economic slowdown has changed the conditions, so we are not certain of what may happen. Anyway, uh, overall, the fact is that inflation is subdued, and as long as it remains that way, there's not much we can do about it. Strengthening the currency, right? Anyway, sorry. The next round of interesting data will come tomorrow with the release of the United Kingdom employment figures. This is pretty relevant. I do believe that we're expecting a slightly positive report. Earnings are expected below previous months. Take a look at earnings; they will probably lead the way, particularly if budge much from the market expectations. Okay. In the US, the fact is that housing building data is not as relevant, and the FOMC minutes will probably grab all the attention in this Wednesday, right? We are not expecting anything new, right? Nothing different from what Dudley and Yellen have said lately about conditions having worsening but remaining in the tightening pot. And I'm not expecting much close coming from here. But if there's a strong change in the wording, either for good or for bad, the market will likely react, right? Thursday, we will have employment data in Australia, which has been quite interesting lately because it has shown strong divergences between the actual reading and the expected, and therefore trigger long and sharp wide movements in crosses during the Asian session. However, I have noticed that if those movements are hardly sustainable in European and American sessions later. So beware of that. Beware of a counter trade in Europe after the release of this employment data early Thursday in Asia, right? Uh, the ECB, I know they are having their meeting, and these are the minutes of their meeting, and this is a non-monetary policy meeting that it hardly affects the market because there's no release. So despite they have the risk to move the market big, I'm not expecting much from them this time, okay? And of course, Friday's attention will focus on inflation again. US inflation, Kennedy inflation, of course, the US one will be the one the market will be looking at. I still believe that it's subdued. I know that the year-on-year reading is expected almost to double, which would be a good indicator. But if a monthly figure is like negative, like we are waiting for, I'm not expecting much support for the greenback with these readings. Okay. Anyway, let's go to charts and see the levels we should take care of this week. Okay. Anyway, the euro, I have been long saying, and I have noticed that this has been happening ever since last year, that the 1120 is a major resistance support level, static one, I mean. If you take a look at bigger time frames, you can count the times the price stalled around the level and had a struggle before breaking it or higher or lower, right? So the fact is that we have broken through it last week with not much hesitations, pullbacks held above the level. Take a look at the forward charts. We have some spikes, but nothing else. And we rally further, and then yesterday we tested. So far, the level seems to be holding, but I would like to see some advance beyond 112, sorry, today. So we can talk about further recoveries, 1260 area came first, 1310, then next probable intraday target. I still believe that if this 1120 holds, we will move towards a major resistance, which comes at 1460, the level that capped the upside for most of the past 2015, right? But so far on intraday, there's not enough strength coming from indicators to confirm the upward move. That's why I'm waiting for some movement beyond 12, some consolidation above 10 or breakout and acceleration through the level to go long in this one, okay? Of course, on the other hand, we lost that 1120, the risk will turn towards the downside, right? And the immediate short-term supports will be the 1050-60 region, where we have several intraday highs and lows, and then of course the 110 figure, okay? I don't see I see this week to be as a quieter one than the previous when we have all of that sharp advance in the pair. Okay, I do expect a quieter week because it's the last week of the month. And usually the market tends to be quiet. We have less relevant data and we get ready for the next week, which brings a lot of relevant data, right? So beware of that, guys. Beware of the market entering in some sleepy mode ahead of early March, which will bring a handful of macroeconomic releases to move the market. The pound, honestly, has been pretty boring lately. Sorry, it's sort of developing within a small triangle. Yeah, it's a symmetrical one, right? Not much definitions coming in here, right? Take a look at the daily. We have that recovery, and we enter a consolidated range that is currently shrinking more and more. At this point, I don't believe that a break above the trend line should be enough. I would like to see the pair taking its highs in the 40.60, 70 region, right? To talk about a bullish continuation, which should replicate the pull of a flag, right? You know that, guys? When you have this kind of flags, the break higher should signal a rally that equals the pull of a figure, right? And that will be 500 pips yet. I won't be happy if the pair does not break above these highs. Anyway, and on the other hand, it seems more like the chances have turned towards downside. We have some support around 43.80, the trend line, previous lows. If we break through that level, then the figure should be discarded, and the pair will probably plug back towards the 43.20 region right here, right? And I'm expecting it then to fall down to 42.50. Okay, if we break 42.50, then there's a good chance we will continue back down towards these lows and lower. But for the most, it seems like the pound is having really hard time to try to grab market's attention. Okay, and for the Japanese trend, remember we talk about February being a month when usually the Japanese yen tends to strengthen. Well, it did, right? It did, and pretty in plenty. It's still a week and a half to go, but there's not much upward potential in here after the sharp decline we have seen last week, the previous 2 weeks, in fact. And I do believe that the pair will remain under pressure probably until late March. Remember, I told you the fiscal year in Japan ends by the end of March, right? So the yen tends to be strong ahead of that date. The rules years ago were about companies being forced to repatriate funds and therefore rebuying the yen, and therefore the yen being on demand and that's why the trend came from. But a couple of years ago, in fact, a bit more than a couple, that rule was changed. So actually, Japanese yen strength is not only related to that rebuying in local uh, companies, but of course that helps because many keep doing it. Okay. Anyway, it's the fiscal year end in Japan, and that means the yen will tend to appreciate. Remember that. As for the shorter term outlook, what we could wait from pair, we have flirted with 15, right? Earlier today, late yesterday, but the level seems to have attracted selling interest, and the technical readings are suggesting we may correct for the lower. I have an immediate support around 1320, right? I'm sorry, shorter one 1360, and then 1320 to 1310. I do believe those are the lows, but if we close the day below 13, the risk will turn marks towards downside. It's a bit too much what we had last week with that to 111, but I do believe that we can go back to 112, 111.70. Those are probably bearish targets from this week. There's 1420, right? That's for me the first resistance. Take a look at the chart. We have several highs and lows around it. So if we advance beyond it, then on a sudden dollar appreciation, we can retest its highs and above 15. I then see scope for a test of 16, 16. That's my main bullish target if the pair reverse course, which I'm not seeing to be confirmed from a technical side right now. Okay. The OC is looking pretty messy to me, to be honest, guys. I'm not getting the hand grabbing it lately. Not my favorite pair to trade because these days, because at this point, it seems that the recovery will probably extend, but spikes or advances continue to meet selling interest at higher levels. So I believe there's a battle going on in here, and I don't have it much clear of how this battle will end. Although what I can see in the charts, it's that the bulls are so far prevailing, right? Anyway, I would like to see some follow through beyond 70 to 40, right, to confirm a stronger rally. Honestly, not my favorite pair today, right? And there's one more thing that we may talk about, and that's gold, right? Remember, we talk about the probable bottom, the double bottom taking place and further gains. Well, the rally extended well beyond my expectations, although we reached the 1250 level, which was a probable bullish target, but I was not seeing it that clear at the time I called for it. I was expecting, honestly, the commodity to take longer time to reach that target. Anyway, we reach it and we correct lower. Uh, at this point, I believe that the risk is towards further downward corrective movement. So I don't believe it's time to buy right now. I could wait for another pullback. If you grab it in yesterday's decline or earlier today low around 1190, you were doing great. I was sleeping at the time the commodity reached this level. This is the daily chart, and you can see if it bounced from a former high. It's great, but at this point, 12:15, it's a bit. I doubt we will have the strength, right? Market has to rush to take profits out of gold, because if we have any positive news coming from the greenback, coming from the US, and strengthening the greenback, the corrective movement will probably be sharper, right? Anyway, it's still long-term bullish for me, but maybe we need a bearish corrective movement in between before a new leg north and a strong one. Okay, that's what I'm thinking in there. And I don't know if I have something else to share with you guys right now. Oil, I was taking a look at this Fibonacci retracements. We're pretty fair, right? Over this past few days, we have a spike above the 61 but fail, and now we're breaking through the 50, which is where the commodity closed this Monday. So I do believe that extension below this lows, short-term talking, I mean 29.40, to be sure that's we are getting it at the right point, will lead to further declines in oil. Sorry for that. Anyway, let me remove the screen. There we are. Anyway, I believe that's it for today. I won't be here next week. I'm taking a holiday. So see you back later, right at the beginning of March. And thanks for being here as usual. And that's it. Bye bye. And thanks.